Okay, welcome in, Trader Nerds. Happy Thursday, noon on the dot. Look at us starting right on time. It doesn't work out a lot. Yeah, thank you, Ed. Thanks for the t-shirt compliment. Ed's got one too. You can order one. It's in the descriptions down below. Trade Naked. I got quite the compliments, Beth, on my shirt today. Well, I don't know if it was compliment, but people were looking at me. The Trade Naked shirt at the thing. I think they were probably thinking, "Oh my God, you beach." Yeah. Well, Jenna. Not Jenna, but yeah, Jenna looked at it and said, I do. She had her trainer uniform on, so it was Jenna. I knew it wasn't her twin sister. They told me how to tell them apart. One's got long hair and one's got short hair. But listen, you keep cleaning the house like you do, and I'll go to the gym and do the workouts, okay? Unbelievable. Look at this, y'all. Look at this rainbow Fibonacci fan. All right, where we're going, y'all. We might have a little support right here, around in this area. But we are probably going to fill these gaps. Look where the biggest gap is, right at the 50% line. Doesn't surprise us at all to see price starting to have trouble with this little up move. We will have a little bit of support here probably. Doesn't surprise us here. The issue is we've got the point of control down here, but point of control could easily move here to here. So this is a magnet. This is a magnet pulling price out, but we do have probably a little bit of resistance or support right here. Huh? Yeah, for what I know, I have no idea what I'm doing. It just looks good. I like drawing little wiggly lines on here just to act like I know what I'm talking about. I have no idea what I'm talking about. Look at this. Well, hello, ladies. Look at this little profile. I mean, when I opened this up today, I said, Evan, eat your heart out. Now, Evan probably doesn't have this little, I call this, what did you call this the other day? A puddle of death? We got a puddle of death here. And our puddle of death is $5,708 bad to the downside. Isn't that groovy? I just love that. Look at that. We have a puddle of death. So in a $38,000 account, that ain't bad. So 38,452, 455, 38,455. Let's record it. 38,455. Let's see if we can play the Jefferson Homes today. Surely we can. 38,455. 38,455. Cue the band, Roger. I said cue the band. Oh, no. Where's my darn Jefferson? Here it goes.
Well, we're moving on now. We're moving on up to the east side. To a deluxe apartment in the sky.
Yes, hallelujah. All right, so let's go to our Greeks and ratios. Get all those in. Right, so our Greeks and ratios are, move this over. And we are at 69 deltas, 32 theta. 69, 32. Uh-oh, we're going down in theta. Tag it, 69 and 32. So VIX is at 19. I do know that. Darn it, what's wrong with this? My computer, y'all. I got this CC cleaner thing. I even bought the pro version to clean my computer up, thinking it'd make it faster, but who knows? I'm doing the best I can. I know I got a lot of apps open, but I've had a lot of apps open. So I closed and I did delete my cookies and I did everything I could. So let's see what our buying power usage is. Our buying power usage is 79.85. Use it. 79.85. Let's make some decisions here. 79.85. Okay, 79.85. So we're at 20% buying power. We're at 0.08. We're at a little bit long. So what would you do if your theta was not sufficient? Well, what we should do if we're prudent traders is we should trade naked and put on a new trade. Now, let's go look at our nakeds first and see if we've got any that are. Beth, if you're going to hack like that, could you please go to another room? It's very disturbing to us. I apologize for Beth hacking in the background. So let's see what we got here. I'm trying to do this by days open. So we're going to close. Beth, he's kind of messing up my thing here. Y'all are too loud. All right, so we've got. Oh,
would you mind keeping with the theme of our conversation?
So we are up. Let's make sure that's not a. I don't see any loans that go along with that, do y'all? let's see, 35.10 would be a 35.60 long. I don't think 35, so that's got to be a naked. All right, so we got 2 of the 35.10s at 50 days. So we've been in those 31 days. Let's take our profits. You want to? You want to? Let's close those, and then we'll reposition. So we'll close the full 2. And on this account, I just kind of eyeball stuff, right? This is a freehand account. So we'll go there, close those. Come on, little babies. Get me out. Get me out. Oh, Evan, you got a question? Yes.
You were waiting for my hand, weren't you?
I got a notification. Evan raised his hand.
No, I was just going to say you should kind of keep with the theme of the conversation yesterday.
Yo, Evan.
Can you not hear me?
Yo, Evan.
Hello?
Okay.
I can hear you, Evan.
Okay. I was going to say I tested my microphone and I guess Bobby just can't hear me. Hey, Ed, will you do me a favor and or somebody do me a favor?
Evan? And y'all can hear me. I can't hear Evan. Unbelievable. Hold on. Let me set my headphones. That's why I couldn't hear the thing say. Hold on, Evan. Let me change my microphone. So my microphone and my Elgato Wave. No, I want to use my. Now let me hear if I can hear you.
Test.
Nothing yet. Hold on.
Nothing.
Speaker 6. I'm speaker 6. Y'all give me a second. Now say something.
Hello. Huh. Nothing.
Same as system. All right, try it again, Evan. Try it now.
Hello.
There, I hear you. Praise the Lord.
All right.
All right, Evan, go ahead.
I tried to jump in a few times a couple minutes ago, and it's like, I don't think Bobby can hear us.
I couldn't hear you. I apologize.
No, it's all right. I was just going to say you should kind of keep with the theme of what we were talking about yesterday and manage by your risk. So I was going to say you should pull up your risk curve here and see, because you were asking what we would do based on the deltas and the buying power in your theta. See
okay, so
the downside is, and then kind of decide from there. Since this is your freehand account, do you want to put on?
Now tell me how to do it again, because I hadn't quite got it yet.
Positions, capital requirement.
Mm-hmm. Where's my cap requirement? Here we are. So
and then
we can do this. This is good.
Click the top box for total, since you only have MES positions in here, and then risk analysis.
Now wait a minute. I thought I have ES too. Why is it not showing those?
Well, do you have ES in this account?
I swear I did. Let me see. Let's double check. Because it would be.
It should show up there if you did.
Yeah, right here.
Oh.
So I do have ES positions.
Go back to your capital requirement tab.
Uh-huh.
And
it's down here. Let me go get it. Capital requirement. Okay, here we go. Let me hit this little. Let me hit this little rehash.
Yep.
Thing.
Okay. So go to risk analysis, and we'll see if we can find your MES position or your ES positions over here. They might be there.
There they are.
Oh, there they are. So they're accounted for.
Okay.
Because they're checked, and you can see the totals for them.
So my risk analysis, Evan, make sure I read this right. It says if I have 20% down, I'm going to be down $4,000. If I'm 16% down, I'm going to be down $7,400. So do we do anything with IV shift over here at all to see what?
I haven't been messing with it, but I think it's a little bit different than Tastyworks.
Okay.
So,
but if there was some, it could be upwards of 10,000 or more, I guess. So
yeah, I've left it at 0, and that's kind of just been something that I've left as a constant. Because if you, I don't know. The other day we were moving, the market was moving up and IV was expanding. So technically you should have crazy profits to the upside, but we didn't see that either. And I haven't seen crazy losses to the downside. So I've left it at 0.
Okay.
But looking at that, what does that kind of tell you? Do you want to put on more risk? Do you want to do more risk and a hedge to increase your theta? I don't know.
Yeah, I think what it tells me is that's an acceptable risk for me, but I kind of like what you were doing. I kind of like what we were doing is, hey, we've closed this thing, so let's put on another one. Now, even on your rolls, you're doing a Sweet Bobby hedge. Is that right?
Yes. Any naked put I sell, no matter where it is in the cycle, I throw on a sweet value hedge.
That's interesting. Really interesting. All right, so we may do 2 tranches of that today. Let's see what we're doing here. So I'm going to go out and roll my little nakeds out. So we're going to go, oh, and we're going to do something today. Someone brought up something really interesting. They said, if we did have like a nuclear war or something, is it possible that the market should be shut down for a few days? And if that's the case, we're not able to capitalize on our 7-day puts. Now, let's look back. What happened during the Corona crash? There were some limit downs, but there were no days that the market shut down. The only time that the market shut down was during the 9/11 attacks. How many days did it shut down? It's like a day or 2, wasn't it? But I see the concern. So we'll look, and they said, hey, maybe we need to do 14 days, 21-day protective puts. We can look at it. We can certainly look at it if that's a concern and just compare and contrast, right? Let's see what it looks like. Because we did the 150-day the other day, which was kind of cool. All right, so this is going to be a quantity of 2. And let's see, 27.75. Let's see if we get filled. 27.75. I said 27.75, dang it. Make it less advantageous for us. So, okay, we are in, baby. We are in. So we got our little field. All right, now what do we do? Okay, so now our theta is 33. What was it before? We were at 75.33. So let's see what we are now. 75.33. Okay, we increased it a little bit. That's good. Now, what Evan's saying, he would do a sweet Bobby hedge. Now, what I think I want to do is put on an entirely new trade with a 111. So I'm going to go out to this 78 days again, and we'll find, I've been layered them in here somewhere, right? So let's layer in another trade. Let's do a 111, increase my theta a little bit. That's fine. We'll go here, try it at the mid. We'll just do 1. I said we'll just do 1. Come on, little baby. Come to daddy. But when you think you're going to quit coughing? Oh, did y'all hear her? She said, when am I going to quit talking? Unbelievable. Beth, how disrespectful is that? Unbelievable, Beth. All right, so we want at least 60 days on our put debit spread. So let's do a long put vertical, 50 wide. All right. And let's roll him down. So that's doing a 111 plus I rolled some. So let's go down to about $10. Oh, I hate when it does that. It just kills me. So let's go down to 11.75. Let's see if we can go down here. 39.40. 39.90. I got a touch of it too, though. Beth has infected me with her stuff, with her COVID. Now, have any of y'all got the shingles vaccine? I see these things about the shingle vaccine, and I've heard it hurt. Someone had shingles in their ear, and they thought, "Oh my God, they're going to die." And I'm like, I don't know, man.
Yeah, I've had it. I've had the shingles vaccine.
So you would recommend having the vaccine?
Yeah, I had actually 2 different ones. I had the first one that isn't supposed to be as effective as the second series.
Yeah, my pharmacist said that I needed to do 1 shot and then come back a couple, times before. I didn't know if y'all had that. We talking. Yeah. We sound like a bunch of old people here.
That's the one. You have it, and you kind of feel like you have the flu after for about a day.
Yeah, I don't feel that either. Maybe after I get off my cruise. Now, y'all, we're going to take week after next off. We're just going to have an off week because Sweet Bobby will be cruising to the Bahamas. Yes, with my 5 little children. Beth, we're going to open up a offshore bank account while we're in the Bahamas. Is that one of those places it's good to open up one? We'll run into the bank there and say, hey, how y'all doing? We're here. We're going to open up this account in the Bahamas. All right, so we got that on. So now let's see what we got on. So I got a 111. I rolled out. So Evan would say, I need to do a 3-6 Sweet Bobby Hedge. Rough. Wow. Well, let's see what that would look like. So let's play with our strikes. You know, anywhere in here. Evan normally does 15%. I mean, I could put them in anywhere. I kind of like these nice round numbers like 3725 or 3700. You know, we already got one there. So let's move him up to the 3725. I like those nice little things. So we could do a 3-6. What, Beth? I like those. Oh, that was the funniest thing. If y'all ever watched 90 Day Fiance, this old gal that lives in Georgia, her butt's got about 2 axe handles wide. What's her name, Beth? I can't remember her name. Anyway, she is so funny. She was sitting
Angela.
there. Not Angela. I love Angela too. Oh, yeah. But the black-headed gal that sells the adult lingerie for big gals. Anyway, she had this guy, Luis, that she met from the Dominican Republic. He probably 19 years old, and she's probably 50. And anyway, she was getting on to him for drinking and snorting drugs and going to the strip clubs. She says, you go to the strip clubs, you drink, you eat, and all these, you do all this, and these woman gallivanting around. He goes, yeah, I like those. That's what he said. I like those. And they just cracked us up. I like those. Oh my gosh. So we got to 29.75. I guess you had to beat that. 29.75. They didn't think it was funny, but 29.70 or 37.25. Let's just price it and see if we can get something at 50-something days for credit. 37.25. Beth, are you really going to do that the entire program? Well, Beth, it's a lot of coughing. If you don't mind, go outside and smoke a cigarette or something. So we couldn't do it for a credit. See that? Because that would be 30. Let's see, with 37.25, 36.75, that'd be $34. So we got to go down. Let's see if we can price this what it would be. 36 days. Didn't give us a ton of days to protection. Let's see what we got here. 36.25. 36.25. Look at that. So we could go 6 of those. But what you could do is kind of move them in, right? You can move these things in just a little bit, you know, pay a little bit more and get you a little bit more protection. So we could go 6 of those. Now this order, they won't let me do it. Is that going to let me do 6 of those without doing 3 of the other one? No. Dag it. Dag nabbit. Let me go back down to quantity of 3. And then I got to click here. I said I got to, there you go. Got to click there. Then I can make that 6. Let's see what our price would be for that. Yeah. So that would give $17.50 credit. Wow. That's a bunch of credit. I don't necessarily need that much. I could make it a stronger hedge by going to the 36.50, getting $16.50. We could definitely don't want to buy where I'm saying, where's the crowd? I'll be still. Anyway, screw that. Let's clear that one leg. And we'll just fix it. Delete leg. So we're going to sell 3 of the 36.75s. Dare I even try the mid price? I mean, they've been kicking me all day. Let's try there. 3 of those for 33.75. Then we'll go buy 6. I said we'll go buy 6. Hey, shout out to my brother-in-law. He's been watching my videos, y'all. And he says, I'm kind of proud of you, Bobby. I didn't know you could do that. I'm like, well, thank you, man. So shout out to me. He's watching today. Come on, feel me. Not you, Matt. Don't feel me. Just, you know, I'm talking to the screen here. Okay, we're feel. All right, so now let's go put us in a trade and then see if we can look at our risk graph and see what we've done for ourselves. So 36.75. So we'll go to 36 days, and we said we could probably go. We might could do this as a calendar, right? See what that would be, 20, and we sold that for 30 something. Now we could do that, y'all. We could sell a 36.75 and then buy a 36.75 and make the Sweet Bobby Hedge a calendar. Some of y'all are doing that, or 37.25. Sorry, 37.25. Let's go back. Trade 37.25. Let's see what we could do that for. 12.50 be 24, and we sold that for what, 33? Yeah. What's wrong with that? That gives us a nice little hedge, wouldn't it? So why don't we do 6 of these? Okay, we got 6 of those. We'll try to work it at the mid price so we pay as less as possible. Wait a minute, it's unavoidable with the vax? What do you mean by that? Y'all are saying that I'll still could get the shingles, or that it's unavoidable the flu-like symptoms? Yeah, I better wait till I get back from the cruise. Of course, Lord knows what I'll catch on the cruise. All them people in the Petri dish. Unbelievable. Beth, how'd you talk me into this? Huh? But we didn't go on vacation in December. That was Beth's fault. We didn't go all the way back to, we went on an October vacation, didn't we? Oh, yeah, the band. That's why we couldn't go. They had darn football games. We had to end up winning the state championship. Unbelievable. What's wrong with people? All right. So now we took, let's look at our risk graph, see what it looks like over here. Let's see what this thing looks like. Let's see if it'll update that quickly. Come here, little baby. Let's see what you look like. Let's see if we helped ourselves or not. I said, let's see if we helped ourselves or not. Well, maybe it'll pull up. Let's see. Here we go. A little slow. Just a little slow. Look at that, y'all. Evan, comment on that, puppy. Huh? That was $5,700 a while ago. Now it's $2,100 to the downside. Sounds like if I'm going to buy some immediate crash protection, I could buy me something at the 33.70. No, 33.30. 33.35. Let's see what that looks like. 33.35. Let's see what I could buy at the 33.35 to bump that up. Isn't that great? So let's look at the 15 days in case, we go to war and they shut the market down and you can't. 33.35. What's that going for? 33.35. How cheap can I get that? Look at this, y'all. Look at this. 33.35 right there. 45 cents. I just don't like that though. What can I do it on a 7 or 8 day? Oh, we were going to do this in the ES anyway. Sorry, y'all. We got much more strike. Here we go.
What is that move down that you're down $2,000? Is it like near the 2 standard deviation?
Yeah, it's at 2 standard deviations. And where I'm at is at SPY 333.66 is my maximum thing. See this number here?
Mm-hmm.
So
if we had an event that was so severe it caused the market to shut down for a couple of days, do you think we would drop more than 70 SPY points? I would think so. So you might not have to do anything with that area right now.
Yeah, I may not have to do anything. I mean, and two, $2,000 worth of risk on a $40,000 account. I mean, that ain't bad, y'all. Now, okay, if you pop volatility in, it ends up being 6,000. That ain't bad either. But I wanted to make sure that we do look at what, someone was concerned. Hey, Bob, if they shut the market down for 3 or 4 days and you've got your 7-day protections on and they start expiring before you can use them, then you wake up and you're exposed. I got that. Let's see what happens let's see how far away we can get with a 15-cent option. Let's do this. Let's compare and contrast. Y'all ready? Let's trade some stuff. Let's see. Let's look over here before we do anything. This will be great. So let's go over here. We'll go to ES, right? So let's do our normal 7-day protection that we've been doing for about 15 cents. All right, here we go. 7-day option for 15 cents. Let's go find him. Come here, little baby. Come with daddy. Come here, you little hellion. All right. So let's buy him, right? $33.70. That's a great place to put it too, y'all, because that little valley of death was $33.60. So let's analyze the $33.70. Now let me make sure I get rid of all the junk over here. So let's go to ES. And we're going to hide the, what do you call, position, so that we only see the simulations. Okay, show all. I'm going to hide positions. So we only have simulation, and that looks like just one little trade. Let's make sure. So there's our 33.70. Bobby, do you think it's better to use SPX as a hedge versus ES since it has a higher notional, especially since you're buying such cheap options? You know, Carlos, I never even thought about it. I mean, thanks for bringing that up. Lord, we can look at that too. All right. What I do like about the futures course is that if something blew up in the middle of the night, we can trade around those. But, I got you. SPX, it'll open up next day. So here's our one little thing here. So let's just check it out. So it gives us no buying power. Let's do our 4 fall steps. That's a good point. Let's look at SPX too. I got no problem with that. And it's fun. Where can you have this much fun? And I know if you're a new YouTuber and you're looking for the latest strategy to make $1 million in a day, this ain't it. But could we make 60% a year? I think we could. So this is saying I could make $10,000 on that put. Okay, let's say on a 20% down, and that's what we're really protecting, y'all. We're looking for that 20% crash insurance. So let's compare the 7 to the 14. All right. Now, we could either try the same strike, but I'd like to say, let's just use the same amount of money. Let's see what this thing does at the 30-50. Now, further out. And then we could try the same strike too. So let's just try the closest we could get for 15 cents. And let's analyze this one for 30-50. So a lot of difference in where our strike is. So now, on a 20% down move, hold on, let's get my price slices right. I love price slices. It just makes me think of pecan pie. All right, so here we're getting $6,000 worth of protection. So we're losing $4,000 worth of protection. So to get the same strike, though, how much more would we have to pay? So let's see what that looks like. So to get the same strike, we'd have to go to the 33.70. How much would that cost at 14 days out? 33.70. How much more would it cost me? 33.70 at 35 cents. Sorry, y'all. It's best phone. All right, so let's look at the 33.70 at 35 cents. What does that get me? Oh, these stupid expirations. Quit doing that. I'm going to just use my ES so I know where my price slices are. So that gets us a lot more protection, right? Instead of 10,000, we'll get 12,000. But of course, it's costing you a lot more. But here's what we got to think about, right? Here's what you got to think about. Okay, Bob. Oh, Bob, oh, Bob. You're spending twice as much. But what? But you're getting twice the amount of time.
Paying half the commission too.
And half the commission. Okay. I could buy that. So maybe we think 14 days might be better. At about 35, and we don't have to buy as many, right? Because you sit there and go, okay, now we can just sit on it, watch our risk profile. I like that. Yeah, y'all want to look at the 21 day? I don't think I want to go over 21 days, but over 21. We'll go over it, but I don't want to go on an expiration over 21. I don't think. because I want these to be kind of, let's look at 21 days. What was the number? Was it 37.30? That's how much that cost us for 3 weeks of protection.
33.70.
Oh, is it 33.70? Thanks, Hal. So that's going to cost me 85. So let's think about that. So now I get 3 weeks of protection, but instead of it costing double, it's going to cost, what's that? 55 times as much, 5, 25, 75, over 5 times as much for only 3 weeks of protection. That's not what we should do, y'all. Do y'all agree we shouldn't do the 33.70 at 85 cents? It's just too much to get that same level of protection. But I kind of do like saying, hey, just so I think let's do this. I think instead of a 15 cent and a 35 cent, I think what I'd say is let's just go to a 30 cent. That kind of, let's split the baby. So let's say that we go to a 30 cent option. Should get us a nice little protection at 14 days out. So let's show you what that looks like. See how close we could get. It's going to be close to that 33.70. So 30 cents. We're willing to pay 30 for twice the length of protection, saving us commissions. So that would cost us, so let's go here. And let's analyze him. So we're at the 33.25. That's not bad. Let's see what our 33.25 looks like. 33.25 gets us, chum here. 33.25 gets us. Uh-oh. 5 positions. Oh my gosh. Oh, I'm on the wrong thing. Come on, Bob. Beth, will you bring me an Adderall and a Diet Coke? Excuse me? Beth, the life I let you live, and you won't bring me a Adderall and a Diet Coke. Our second gets us $11,000 of protection, and it gets us twice the amount of days for 30 cents, or we could do the 33.70 for 7 days and get $10,000 worth of protection. Now, here's the thing, you know, I know as time goes by, these things get weaker and weaker and weaker, but still, you never know when the crash is coming. So I kind of like the 14 days, just in case they shut the market down. I don't think there's ever been a time they shut it down for 14 days. So we should be fine there if you're doing the 14 days. And just, you know, you don't have to do them as often. We don't have it, but I don't think it's right to do the 21 days. So I think our little happy spot may be the 14 days. So I can't remember who said that, but if whoever y'all did that, I think that's really good. Now, Glenn says, don't forget that ES is half the listed value. So a 20-cent option is only going to cost $10, not 20, right? Yeah, that's exactly right. SPX is going to give you some freaky looking P&L numbers during pre and post market. Don't let that scare you and give you false hope. Okay. Yeah. Y'all want to look at SPX, see what that does for us? So if we do an SPX though, that's twice the amount of ES, right? As far as how much it's going to cost us. But we could look at it. Let's see what happens. SPX. So that should also give us twice the protection too, though, right? Would it? I don't know, man. Y'all are over my head now. Let's see what we'll do. So SPX, let's look at a 14-day SPX. So we're going to pay twice as much. That's the problem, right? So if you pay 30 here, that's actually going to be 30. And when we pay 30 over there, that's actually going to be 15, right? Make sure I'm right here. 33.70, 33.50. You know, let's see what this does. The 3,300 for 30 cents. Yeah, so that should be $30. Make sure I'm right here. I hadn't traded SPX in a while, but I think that, yeah, $30 plus your commissions. So let's look at him. We're down at the 3,300. So analyze him. I said analyze him. So there we go. SPX. Do I have my price slices set up? Yeah. Yeah. 20. All right, 12 and 20. So here's 20. So that gives you $20,000 protection, which is really, really cool. But it's going to cost you kind of twice as much, right? Because it's 30 cents. So what if you said, okay, what if we move down to the 15 cent on that? Well, we're going to be further away from the money. God, I'm getting confused now. Y'all help me stay focused, y'all. It's one of them days. So if I move down to 15 cents, look at this. Right all the way to 3,000. What kind of 20% protection does that give me? That would actually cost me $15. Look at us, y'all. Now, keep in mind, we still get 1256 tax benefits on SPX. Everybody realizes that. I'll make sure everybody knows that. We still get 1256 tax treatment on SPX. So it's not that we get that. Okay. I see you. For 20% down, I'm getting $11,000 worth of protection. Okay. Even though it's at the 3,000 with the SPX. Okay. I see you. So let's go back to ES and see what our, geez, y'all. So over here, what kind of protection were we getting with, I forgot which one it was.
33.25.
Yeah, 33.25. Let me delete the rest of these. We don't need them anymore. I think we found our happy place. 33.25. So down here, this gets us on a 20% down move. Okay. 11,000 for 33.25. Or we get, let's look at it, how it looks on the price slice. 5,900 to the downside, 11,100 or so to the downside. Let's go back to SPX. That's my 20% there. Okay. Yeah, it's about the same, y'all. About the same level of protection.
Is that SPX a 14-day or a 7-day?
It's a 14, I think. Let's make
14?
sure. Yeah, it's a 14. So I think this is great. So what we kind of figured out is 21 days is too long. We get 7 days while we like 7 days. But if there were something where they shut it down for a few days, what if Wall Street got bumped, right? Oh, they're going to shut the market down for a few days. I see what we're saying. The chances of it being shut down 14 days are not good. There's not that much difference. And let's double check our prices again. Let's make sure. So we know we're going to spend $15 if we buy that. And if we buy something for 30 cents here, no. If we buy something for 30 cents on the ES, that should be $15. Let's make sure we're getting this right. So it's about the same amount of protection, y'all. Peach Poke, owe me a Coke. I kind of like the SPX. It's different, So let's go confirm and send for 30 cents. Yeah, $15. So that cost me $16.80.
One thing with SPX, you can only trade it during open hours. Futures, if something happened, if you needed to on like Sunday or late at night, that's something to consider too.
Yeah. But if it was something like a nuclear bomb, to where they're going to shut everything down, though, I mean, I don't know if that's as big a thing. In other words, I can't remember me ever closing a big hedge after market. And it doesn't mean I won't have to. What about staying at 7 days on SPX, like the idea of shorter since data holds its value? Yeah, there's all kinds of things to do here, y'all. Okay, we're at
I want to point out real quick that
come here, Ed. What you thinking?
During 9/11,
yeah,
futures actually traded that morning, and the market never opened, but futures were trading. Now, I mean, if you had a hedge on and you want to get off, you could get it off before the market shut down. But in that situation, I don't see anyone removing their hedge in the face of like that type of national crisis. Seems like you leave your hedge on and wait for the thing to play out.
Yeah, I can't imagine me going, oh, thank God the hedge work. I'm gonna take it off there. I don't think I'd be like taking anything off thinking. I'd be like, okay, my hedge is in place. Let's hold one.
But Matt does bring up a valid point of longer trading hours.
Let's look at it with commissions. I mean, we shouldn't nickel and dime commissions. Let's just say how much it cost me. So on SES, if I did 30 cents, y'all remember this, it's going to be 125. So it's going to be $1.82 there. $1.82 compared to $1.82 compared to $1.04. You know, you save on a little bit of commission. I don't know, man. I don't think I really have a preference. I think they're kind of, you know, what is it that Tom or Tony says all the time? 6 or 1/2 dozen. I never have understood that saying. I can't understand it. It's they're kind of two of the same. Now, does my trading plan say that I can trade SPX? I don't think my trading plan says that. So here's what I would say to you today. I can't do it. My trading plan only says I can trade ES and MES. And if I do this trade right now, I have done a stupid trade. I can't do it. Unless I meditate, pray, fast, and tinker to a point that I think I want to do it in SPX, then I'll change my plan, put it as one of my allowable things. But at this point, no. Bobby is not going to make a trade that is not allowable on my plan. Now, look at that. Nick, put a risk reversal with a call back ratio. Unbelievable. What do y'all go? Huh? Glenn, yeah, most people are going to wish they had a hedge on in that situation and not regret that they can't remove it. Yeah, I agree with you. You know, it's not like I'm going to lose that at the end of the day. So, consider that it's only 1604, so it won't cost you dollars and cause a year-long caveat. Yeah. So I think either way, y'all. I think here's what our takeaway is today, though. Hey, just in case they were going to close the market for a few days, if you're going to kind of layer these little hedges in, you know, maybe 14 is better. 21 is not. It costs too much for 21, but maybe, I mean, yeah, 21 is not, but 14 maybe is better than 7. You want to keep doing 7s, do 7s. But I think maybe 14 is the way to go. So let's go back over here. And let's go to 14. Now, what did we say? We said that we were going to do 30 cents instead of 15 cents over here, right? Because we get extra time. I like that. Matter of fact, you know what? I may just kind of put something like that to draw it into my plan so I know where I'm doing. So I have the specifics. So if I pass on the glory tide, Beth will still know how to do this. Beth and her boyfriend will still be able to trade. What are you huffing, Beth? Yes, let's do this. And then let's go see what our thing looks like. So I'll spend a little bit of money over here. $18.37. My gosh. Are they ripping me off over here or what? That's a lot of money. Well, I got a lot better deal over it. Now, I know I ain't got to close it, but I ain't going to close it. We're letting this thing go. All right, now let's go look at our risk profile. You want to? You want to? Well, we look at us solving the world's problems, y'all. This is amazing.
We do want to look, Bobby, but check out Stacy's question at this point.
Yeah, what's Stacy doing?
Because this kind of looks like you're freehanding. So if you are, let us know. If you're not.
Yes. Just to be clear, you're not giving up a Sweet Bobby Hedge. No, I remember I put on a 3-6 Sweet Bobby Hedge today. Or the 1-1-1 put debit spread. These are just extra hedges. Yes. So look at this, y'all. Look at this. I mean, y'all look what Bobby has done. I mean, is anybody losing sleep over this portfolio tonight? Where do you make money, Bobby? Well, I make it all the way down here to all the way here. We've got Ed's puddle of death. The puddle of death brings me down $2,200. Wham, Crimea River. I mean, you can't even buy a transmission for $2,200, y'all, as I well know, because they're putting a $4,800 transmission in my 2011 Rogue. And if we crash beyond that, oh, Bobby is, we're going to the Bahamas again, Beth. Pack up the Woodside and station boat. Huh? Okay, so I lose here. I got a 98% probability of profit. Am I sleeping at night? Well, Bobby, you don't have any theta in the account, you fat black glass wearing bastard. You. Okay. Yeah, I do. I got 23 theta now.
You can't say fat anymore.
No, I don't know, man. Matt, you ain't seen me with my shirt off. They still a little fat in there. I appreciate it, though. So, let's see what we've solved today. I think it is better to do 14 days if you're going to buy a little put to kind of give you some stuff. I think it's better to, 14 days, spend 30 cents instead of 7 days and 15 cents. That's our conclusion for today. And that's our story. We're not giving up Sweet Bobby Hedge. We're still collecting theta, and we just let this little thing just work. All right, y'all. I will see y'all tomorrow.